Chapters.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, good, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Don't make assumptions. Communicate with clarity. Communicate with others as clearly as you can to avoid misunderstanding, sadness, and drama. If all humans would communicate with impeccability of the word, all our relationship would change. There'd be no more wars, no violence, and no misunderstandings. I'm not quite sure about the end of that because you can communicate clearly, and it could be bad. Market-wise, let's take a look at it out here. We have the Dow Industrials up 60, NASDAQ up 68, S&P's up 11, gold contract up $6.90, trading at $18.24 an ounce. We had silver down 39 cents, 23 cents rather, $20.70 an ounce. Light sweet crude down 72 cents, $75.60 a barrel. Notes and bonds. A 10-year note up 6 ticks, trading 111.04. The 30-year up 10 at 124.06, and King Dollar. King Dollar's down 531 ticks, trading at 104.684. The Euro's at 106, the Yen's at 136, and the British Pound's at 120 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, we're up 11 points. We're up a lot higher than 11 points in the S&Ps, and my take is that this thing's going to go red, folks. So we're up as high as 40.24. You've just given up 38 S&P points, and now you're blowing away the swing point, and you have volume behind the move. Yeah, we get big volume here. 1 second. Yep, we sure do. What time is it? So we're on the bar. We have 28,000 contracts. It's blowing away 1,000 contracts. So what that sets up, this is going to set up the highs of, not the highs, the last gasp on Friday. Last gasp on Friday, you can see that big bar right there. That was at 10 minutes of 4. And the top of that bar is 3977. So I suspect we can get down into that number. That'll get us almost flat, really, on the day. We go into the NQs. We take a look at the NQs out here. Same type of setup inside the NQs. That's coming after the swing right now. So the swing in the NQs has, what's this one have? This one has, that's 13. Yeah, so 13,000. We just did 10. And you're not at the swing we're talking about. The swing I'm talking about is 12,180, no, 12,065. Yeah, 12,065. Bottom line, same type of setup. Now, I think that, for 60 minutes, that's quite far away to get down to the pop that was on Friday, coming into the close. That number, let's get the number anyway. The number is 12,003. So we get that's if it doesn't go there tonight, it's going to go there tomorrow morning. That's kind of how this is set up too. Gold, the gold contract out here, that's still in an ABC structure on the way down. What I do think you're going to see is some fluctuation going back and forth. And we'll see What you don't want, if you're a bull in gold, we do not want this to bounce on light volume. I'd rather finish out the ABC structure down, which is 1781.50. That's the ABC structure down. If you go look at the XAU, the HUI, we're getting close, man. We're getting close to something that could really get you some good action going. Because what we have here is that we take a look at it, what you're going to see, here's the November 8th bar. That's what we were talking about. We got down to the November 8th bar on Friday. Now, the bottom of that bar, this is where this gets shaky. The XA and the XAU, the bottom of that is 106. Well, we got down to 110.36. HUI, same type of setup. The most important one out here right now that really can get you direction inside the marketplace is the note and bond market. And what we have with the note and bond market is that you're going to see that we got down to the 110.21. And you can see this is like a classic. The number we're looking at is 110.22. We traded 110.21, but I want to show you something here. And this is going to be really dangerous to the bond market. Okay, so we get down to that level with 2.3 million contracts. Well, you're bouncing today on 750,000 contracts. If this goes sideways for 4 or 5 days on light volume, get out of the way, because what that would be saying, let's bring this up. I'm going to put this on a generic chart. And the reason you put them on a generic chart, folks, is that you can have some kind of an inclination of where the next level is. That's what I'm looking for here. Look at this. I got to bring it back years, not months. Okay. Wow. This is heavy. Holy cow. I actually just brought this back for 15 years, and I had to do it longer than that, folks. I'm putting it back at 25. Yeah, that's a problem. Okay. So where we are right now, look at this thing. Wow, man. Okay, so we got down to 108.28. Let me pull this way a little. Okay, so let's do this one. What is this? 122. That's 14. That's 102. Let's find 102. Where's 102? 102 looks game. Let's see what we got here. Okay, 102. Where are you? That's 112. Yep, here we go. We're going, man. So your next lowest swing is actually 104. Is that 102? It's 101. Yeah. We're going. This is going to be sick, man. Let me see what kind of retracement this is going to be, because if I go to the lows of 1999, yeah, it's going to be a 7.86, 7.6 retracement. Yeah, this thing is game now. This is going to be pretty intense, man, because this is game now down to the 102 to 101 area, and that is going to throw the short-term rates like to the moon. Stay right there, folks. We'll come right back. We have the Dow. Dow Industrials right now up 74. Nasdaq's up 74. S&P's up 12. Stay right there, folks. Come right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. Educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now up 45, Nasdaq's up 67, S&P's up 9.5. Let's get over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the hour. And don't forget, folks, Steve has an outstanding show here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. Now, it's very easy to get Steve's newsletter, folks. Come over to our website at TFNN. You go to newsletters. You're going to see Mastering Probability on the right-hand side. You can get 1 month for $149. You get 6 months for $695, which is a savings of $199 or 22%. And you get 1 full year for $1195, which is a savings of $593 or 33%. Now, they all come, folks, with a 30-day money-back guarantee. Steve has a huge amount of great information as you get his newsletter that's going to help you dissect and bisect the markets each and every day. Check it out at TFNN. Steve Rhodes, what's going on?
Well, what a difference a couple hundred miles makes. You are celebrating a nice spring. Down here, we're celebrating a heck of a hot summer.
Yeah.
Already.
It's
10 degrees difference, I think.
Listen, I lived in Boca. I know that. Yeah. It's amazing, folks. And so if you look at Florida, here's the finger going down. Steve's on this side down here, and we're on the middle up here.
It's that good old Lake Okeechobee.
Yeah,
that's really the kind of the.
It's just it's funny when you look at the map in Florida of the United States, folks, of Florida. I mean, Florida goes like way past Mexico on the way down. I mean, it's wild, isn't it? I mean, it really is.
Yeah, absolutely. So I thought we'd talk about one of your favorite things today, gold. And to do that here, I was over the weekend. I was looking at some of the Fed data. I know you access the Fed data, folks. That's the Federal Reserve economic data, and it's got a lot of cool charts and information. But so what I started taking a look at here, Tom, was they had some information on inflation, and so just using their data, what they've indicated is that they believe inflation began somewhere around the middle of 2021. So that's what I'm going to use here.
Okay.
For our target, just based upon data. Anybody can go back. They can grab this Fred chart. They can grab inflation rates by different countries. You can see the U.S. kind of leading the charge there at 9.9% as of August 2022. Now, most academics believe that inflation was unleashed because of the record amount of money that was pumped into the system as a result of the COVID-19 pandemic response. And this is really one of the Federal Reserve charts out here. It shows the Consumer Price Index, and it compares that against corporate profits after tax out there. And many believe that gold is a hedge against inflation. So you've got folks that believe gold's a hedge against inflation. It also that gold will rise as the money supply rises. Well, on July 1st, 2021, so I'm taking the actual middle of 2021, gold was trading at $1,771 an ounce. As of maybe a couple hours ago, it was $1,825. I think it's still right around the same level. It's only a 3% move. So I would have to say, if that's really when inflation started to kick in, so much for gold rising with inflation. Now, if we go back, so the very first time, Tom, that I purchased gold was 1979. And I was in my last year of college, and I had an economics teacher. And this guy was a big gold bug. He also was, he worked for the Swiss government at one point in time, managing their assets. And in any event, really great guy. So he had convinced me to take a little bit of money and go out and purchase some gold. He also convinced me to buy Hecla mining way back then. And we did that. We went over to Canada because we lived in Detroit, and I purchased some Hecla shares. But I also purchased some gold. So I'm very familiar with this time period because on November 4th, 1970, and I'm sure you and many others remember, but that's when Iranian students took over the U.S. Embassy.
Right.
And they held diplomats for hostage. I think that went on into 2021 out there. So what I have marked on this chart for us is November 4th, 1979, when the Iranian students took over the U.S. Embassy. Now, during the next 51 trading sessions, gold rose by 128% out there. So, to me, those charts suggest that there's a significant rise in gold. It has more to do with geopolitics than it does with a rise in money supply or inflation. So I'm just going to leave that as a benchmark for us to think about. Here's a set of charts. You've seen these before in the past. This takes a look at gold priced in the major currencies. So on the very left-hand side, we have gold priced in dollars. Next to that, gold priced in euros, gold in yen, gold in pounds. So the first thing that I want people to understand is if you take a look at the green arrow out there, when gold has a substantial rally, or any asset really, any significant asset, you need to see it rising in all the major currencies. And most certainly during the period of time where we take a look at those green arrows, that is what was taking place. What I would also note on these charts is the actual high of gold in the U.S. dollar out there, which came in at about 2089, if my eyes aren't misleading me. And what I've done is that exact same date when gold made its high in U.S. dollars, I've marked those exact same dates on gold priced in euros, yen, and pounds. Now, when gold does top out, it will top out at roughly the same time in all major currencies. Sometimes it's right to the day. Well, we have gold in euros breaking through those highs and yen breaking through their highs out there back when the U.S. dollar had made its. So this tells me that the move in gold is not over. It has not topped. Now, I'm not saying that gold will not move lower. In fact, it closed below 1815.50. I know you're taking a look at an A to B equals CD down pattern, and you've got a price projection on that. A close below 1815.50 will negate a TD9 count pattern on Friday. So as you mentioned, newsletter subscribers gain access to a lot of different technical tools that we use to help us identify tops and bottoms. In this case here, this is a bottom pattern. And as long as price remains above 1815.50, we should see some kind of bounce. Now, the other thing that I have on these charts here is I have the weekly, the monthly, and the quarterly time periods out there. So the weekly profile support is at 1816.30. And folks, you should write this down on a pad of paper. So you've got 1815.50 on a daily time frame. Support for the weekly is 1816.30. Support for the monthly is 1813.20. I mean, we've got a cluster here, Tom. And then finally, we go to a really long-term chart, which would be the quarterly profile at 1796.90. So I would say to folks, if we use 1796.60 as the key price point to watch for gold, if we see price close below that, we're going to see gold continue to move lower. This chart here is a monthly chart for gold. And what I show here, Tom, the black digits are consecutive months where the close of the prior month is, the close of the current month is above the close of a prior month out there. And then the red digits are the exact opposite to the moves to the downside. So here, if we take a look at what gold recently did, we had a 3-month move higher out there. And right now, we're trading below last month's open. To me, this tells me, if you take a look at the blue arrows on the bottom, typically we get these little 2-bar or 3-bar knee-jerk reaction lows before we see a bit of a rally inside of gold. So when I take a look at the bigger picture, this monthly chart says we could easily pull back for 2 to 3 months. That would just be something normal. And that says we should look for a low in March to April. Turns out, Tom, this is the 54-year seasonal chart for gold. Okay. It shows that we don't bottom until maybe about March. So the seasonal pattern is following along with this monthly chart here of consecutive closes higher or lower. So this suggests that we get what you're looking for is the completion, at least of that A to B equals CD pattern, and a market that moves lower for perhaps another month and a half or so.
I like it. You know what I really like, Steve, too, folks, is that, you see, the run was extraordinary, folks, on the way up. I mean, we're talking about the last 4 months. And then it gave it all back. And that's really cool because that's what really frustrates people. Do you know what I mean?
Yes, absolutely.
Okay.
Absolutely.
Folks, come over to our website at TFNN. You go into newsletters to see the Mastering Probability right on the right-hand side. Do it right now. Bing. Steve, you have a great one, safe one. We look forward to the show tomorrow.
You too, Tom.
Thank you. Stay right there, folks. We'll come right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at some of the higher volume equities and see what we have out here coming at us. So the mover out here today is Tesla, folks. Tesla's up $11.13. We got AMC's on the run again. We'll come back to that in a second. You get Ford Motor up 2 cents. We get Nvidia up $2.50. You get Apple up $1.44. Inside the NDX 100, the strength versus the weakness inside the NDX. CGen is up 10%. Pfizer's going to be looking to take that over. Rivian's up 7%. Tesla's up 5.5%. Taken away from it, you get Constellation Brands down 1.5%, Intuit's down 1.4%. Walgreens Boots is off 1.3%. Inside the Dow Industrials, what do we have point-wise out here? So, point-wise, what we have, Caterpillar's the leader out here. That's putting 23 positive points. Goldman, 15. Boeing, 11. Taken away from it, Walmart, minus 11. United Health, minus 10. And Home Depot, minus 8.5. Nothing really big. That's the bottom line. So, what is... Oh, this is going to be interesting. Yeah, I got to see this. Okay, one second. Kathy Wood. Man, this is just a... Let me just see this for a second. Okay, so I'm bringing up ARC. I'm just curious of what it looks like she's doing something with... This is amazing. Daily Info. This is just... It is absolutely amazing how much this woman can get into this fund. ARC's Daily Info. Investors added $134.8 million to ARC Innovation in the latest session. That means Friday. The funds increased assets by 1.8% to $7.48 billion. The funds, listen to this, man. This is just amazing. The fund has attracted net inflows of $1.09 billion the past year. So what you have going on here, folks, this is what's amazing. So, we know, you buy the dip, okay? But this is doubling and tripling and quadrupling down on the way down. And what has happened is that she actually has plenty of folks that do the exact same thing, because that's what they're doing. They're doubling, tripling, quadrupling on the way down. These are our holdings. See, let's check this out for a second. These are our holdings as of February 24th. Tesla, almost 4 million shares. Zoom, 8.3 million shares. Roku, 8.8. Exact Sciences, 8 million. Block, 5.7. Coinbase, 6.3. UiPath, 26 million. Shopify, 8.8. Twilio, 4.9. And Teladoc, 11.1. I could go on and on this thing. It just blows my mind. Well, it's not just blowing my mind. There's plenty of tigers and tigresses that are always emailing, asking, how can you take so much money in when it's been a one-way route down for quite some time? I'm figuring it's just that people like doubling, tripling down, and other people think that has to be a deal because something was at such a price. You got to remember something. Just because, this is in particular in the stock market too, folks. Just because something was at a price, I've seen plenty of them have never got back to that price, because the market always overdoes on both the up and down. That's what it does. I mean, the correlation of what something is worth in the marketplace versus what it actually is worth is not even close. Here, I'm going to show you, we got to do this. We got to do United Manchester. Wait till you see this. So United Manchester is in play right now. Is it Manchester United? Okay, here it is right here. Manchester United. I believe this is the thing that's in play. So listen to this. This will get you centered onto what's going on. Okay, so when they start getting interest in, basically selling it. This is a public stock. Okay, the stock went from $12.82 all the way up to $27. Now, what the story is, watch this. This is like amazing. Because the valuation, someone's going to actually come up. A slide in Manchester United's shares deepened Monday, leaving the English Premier's Club stock roughly a quarter below the record high this month as the bidding war for the iconic football club drags on. The dive follows a Financial Times column suggesting the club is worth about $1.6 billion, less than half of the enterprise value implied in the share price. There you go. So what's going to be really intriguing here, and you'll see it in Manchester United, is that is it trading over the actual value that someone would buy it for versus. And my point is that they're always over, they're always under. That's just how the market runs, man. That's the bottom line. Let's go take a look at Amazon first. We take a look at Amazon up here, a couple of these big dogs. So Amazon just, okay, so we're going lower. Look at these. See, Amazon, I'm liking what Amazon's doing, but I think it's going to go back to the lows again. And what we have out here today, this is telling me the market's going lower also. And what it is, folks, is this. Even though we're coming into window dressing, because this is what it is. You can see Amazon on Friday went down 57 million. Well, you're going up at 34. That doesn't work. That's not how it's how markets run, but that's how markets run when equities want lower price. We go to Microsoft, same deal. I mean, Google. Google, Friday we came down to 31 million, you're going up in 17. That doesn't fly. Now, Microsoft is one of the strongest equities in the marketplace right now. Same setup, even at Microsoft. So when you're trying to get hints as to where this market likes to go, Microsoft would be a big one because Microsoft is one of the strongest equities in the marketplace. We go down Friday on 24 million. You're going up today in 14 million. That doesn't fly, And we'll see whether they're going to have window breaking instead of window dressing coming up. You're going to be able to learn quite a bit at this particular point about exactly how strong or weak this market is and exactly how much selling wants to be done. As I said last week, I think it's a slow burn lower right now, and then there's going to be some kind of a blowout. And that'll still take, I bet it's going to take another 3 months or something. The way this is setting up right now, it looks to me like you're going to have a slow burn somewhere in June, July. There's going to be a blowout to the downside, and then maybe you can start building higher prices coming at you again. And I believe when I just had Steve Rhodes on, because I heard him on a show this morning, if you're looking for that information, he's getting that information off the St. Louis Fed. The St. Louis Fed, folks, the website has a phenomenal amount of information that's on it on a continual basis. And the articles, there's some just great stuff out there. So if you want to get a bigger understanding of, where certain things, well, you'll get the facts out there as to what things are. You got to make up your own, mind as to what does that mean? Where are we going? And S&P wise, yeah, it's gonna, they're blowing through the lows right now. So this is gonna put this. There you go. We had 3977. We're at 39880 right now. So we just hit 3978. Oh, here, check this out, though. No, this is going to be an ABC down now. Okay, so, yeah, we got an ABC down. Let's see what we got here. Here's a bigger one. Okay, so we have 4020. It's not that bad. Well, that's 40 points. That gets you down to 3963. 3963. You got an ABC down. You blow it's yeah. So if we blow through the 3977, your next leg there is 3962. Stay right there, folks. Come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Dow Industrial's up 40, Nasdaq's up 61, S&P's up 8.5. And let's just go into those S&Ps for a second. Take a look at and see what kind of volume we got on that last bar, because we're getting a little bounce, and we'll see if this is a new bar, a new bounce. Okay, so you got down to 3978, and you get high volume. So now it's 3977 was the number. You can see this coming across. And what I did there, when you have high volume bars, folks, so what they like to do is get down to the top of the bar first. Now, that didn't hit it, missed it by 1 point. What you'll learn here, and this is how this shakes out, is that if we have, we'll get a bounce going, but if that bounce is on light volume, all that's doing is setting up the next leg down. That's how those babies get read. If we go into the NQs and we take a look at the NQs, same setup in the NQs, monster volume down here. So we just hit, that's 12.058. And yeah, you can see it's far away from it. But hey, we'll see what kind of pop that we get right now. When I say we see what kind of pop, what I'm specifically saying, folks, is that what is the volume as this tries to get higher versus where we are right now? That's what you're looking for. And if it's anemic, then guess what? You're going south again. Let's go to our man John in Philly. John, what's going on, brother?
Hey, Tom, I have to tell you, I just love your bisecting and dissecting these indices and the index futures. And with that in mind, I've got a very specific question on the E-mini S&Ps for you right here, right now, if you could.
Okay, perfect.
Would you please, so I'm looking on Tiger TV.
Yep.
And could you pull up the ESH3, do the 30-minute chart, and just go back like 10 days?
Yep.
I'd like to direct my question to something that you'll see on that chart.
Yes.
And, Tom, when you go on that 30-minute bar chart going back 10 days, you will see last Tuesday we broke down, and then from I think it was Tuesday's or Wednesday's morning low, we popped up 4 separate times, Tom, to roughly 4025, and we've stalled right there and backed off. In looking at that, Tom, would you just describe to us, to me and your audience, what you envision actually happening as that price is popping up to that level and stopping?
Yeah, now wait till you watch this. John, this is so cool, it's sick. Now, folks, this doesn't always happen, but this could be a planned question from John to me about timing the trades. But watch this. This is crazy, actually, but you're going to see it. You're going to see how clear it is, right? So what I'm going to do first is I'm going to the 30. I have it set up, John, as the 30-minute chart going back, and you can see let's see, that would have been 2 days ago. Okay, so that's Thursday. See, and the number you're talking about is the 4034, right? Or 24. It was 34. But see the amount of volume there? 1.26 million contracts, right? Then what happened? Now watch this. This is what's so crazy about this. Then we went down here with 1.17 million contracts. And then it tried to test it, and then it tested it with 989,000 contracts versus the 1.2. So my take is that, okay, you're going to first get to the high of the low, which we just did. That's 3947. Let me see. That went to 78. It hasn't hit it yet. But that's telling me that, you see that high volume bar down at the bottom? This is where it wants to test at least. That's how this is set up.
Very good, Tom. And you have a good feel for people operating. Who's out there just lurking, waiting to sell overhead? Because it's apparent they are, whoever that is.
I think it's all of us, John. The way what happens is that the market is accumulation of all of us in our opinions at a certain time, including, all the machines. You know what I mean? They program the machines, folks. They, whatever way they're programming them. But that's my take on it, because what does happen in markets that I consider this, basically a kind of, we've been in a fast market for a long period of time. What a fast market means, folks, is that you can get wider price spreads. You get 20, 30, 40 S&P points per day. And when you do that, the Fibonacci sequence definitely hits quicker. There's no doubt about that. The volume seemed to work 10 times better. So anyone that gets used to it, they start firing away. And what ends up happening is that I would say that even individuals, you start seeing these numbers go on consistency, which we've been doing for a while. Well, you'll do more contracts, and the reason you wouldn't do more, the reason you'd be doing more contracts, folks, is that when you have consistency, you can still put the stop really close, but the consistency itself will generate more contracts. And, we know you get the big dogs are out there. There's no doubt about that. But all in all, John, I think that's how it's set up. And what, unfortunately, bulls don't realize is that if there's not bids under the market, you'll always go down, folks. Always. I don't care how much you think anything's worth. If there's people that don't want to buy it, it's going down. Because
Tom, I value your time and your discussions there. Thanks a bunch. And just lastly, just those two comments you had. You looked at the daily charts, the price and volume on Microsoft and Google, just 10 minutes ago. That just struck me as so telling. They come down on volume and they're popping nicely, but there's no volume. So,
right.
So thanks a bunch.
Thank you, John. Have a great one. Have a safe one. And what John brought up at the end, folks, is that it's really cool when you look at the big dog. So picture this. Whatever, you have a decision which way you think the market's going. What you should be doing simultaneously is you need something else to validate what you think over here. And that's what we were doing there, because it's really hard, for that to validate it. That's what it comes down to. So it's cool when it validates, because, okay, what that does, that brings my probability up a little bit more, that we're going to be right, and the analysis of where we think we're going to go. So, you just don't use one deal. What ends up happening is that, and there's not a lot of big dogs out here. There's like 8 or 9 big dogs out here, folks, okay? So it's very easy to do, and when we just brought those up, the biggest one that I saw was that Microsoft, because Microsoft is a powerhouse. I mean, beyond belief. My take is that on any pullback or a larger pullback, folks, you want to be all over. Microsoft, what Microsoft has done since the beginning of DOS 101, okay? And I remember specifically, I was in the travel business at that point. I paid $5,000 for those computers and came with it DOS 101, right? And I remember reading the whole thing. And what Microsoft has done on a continual basis, they catch up with everyone, and they just might have the deal to catch up with Google now. And I'm sure Google is flipping out. Stay right there, folks. We'll come right back.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And I have to go over this S&P again, because what I did, folks, when I was talking with John, I had it on a 309-minute, which is 5.15 hours. But you got to remember something, that the futures trade almost 24 hours a day. So I'm going to get it on the 30-minute, and it's the same setup. This is what's even sicker, folks, okay? So this is the 30-minute going back now, and you're going to see the same. Well, what you're seeing here, see, when we came in last week, 4024, that's the number John was talking about, 4025. Now watch what's happening. You're going into that with 140,000 contracts, and the top of that is 224,000 contracts. Bottom line, still says the same thing, meaning that you're going south. So I appreciate the feedback in the den there saying it was a 309, because I knew at the end, but there wasn't enough time to fix it. But there we go. Same deal. Now, Dow Industrials right now up 66. The Nasdaq's up 67. S&Ps are up 10. And if we lay these out and now put them on just the dailies, what you're going to see, you might have another ABC down. That's what's going on here. So check it out, man. I got the SPY up. It's up $1.18. It was as high as 401 today. It's 397. Well, guess what? You're down with 108 million shares. You're up with 69 million today. We go look at the NDX 100. Inside the NDX 100, yep, you're down with 74 million. You're up with 44. These are classic, setups for potential ABC structures down. And if they are, it's going to be a decent one. Inside the NQs, you're talking about 309 down into this 290. So that's a 19-point A to B. And what I will do tomorrow, I will go over the larger ABC structure down, because the larger ABC structure downs in the marketplace are still in place. And I mean a monster way, too, not in a small way. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, folks. Have a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 a.m. Look at him, folks.